In the news this week, China retaliates against the US with a ban on high-tech materials exports. We believe the recent Chinese and US measures marks an escalation of the existing trade tensions. We previously talked about Chinese measures restricting exports of germanium and gallium and how this impacted the investment opportunities in semiconductors and AI. Since then, we have seen trade tensions escalate further, not only through talk of tariffs, but also further export limitations. The US has launched its third crackdown in the semiconductor industry in China, limiting exports of advanced chips as well as semiconductor tools and machines to 140 Chinese companies. One day later, China announced a full ban on the exports of germanium and gallium and antimony, while also restricting exports of graphite. These materials are used in high-speed computer chips as well as in the defense and renewable energy sectors. Exports were more difficult already, but are now mostly completely banned. The impact of the escalating trade war on the investment opportunities in semiconductors and AI is twofold. It increases the risk of supply chain disruptions, but it also reduces the top-line growth for semiconductor tool and chip manufacturers selling into China. We should expect additional volatility in the shares of these companies, as semiconductors and AI are seen as critical areas for both countries. The semiconductor industry is highly resilient in finding other sources and replacing, and it has not hampered growth thus far in semiconductors or AI. As long-term investors, we see this volatility as temporary and treat it as an opportunity for investors.